Welcome to Phillip Futures Market Watch. My name is Vanessa Tan, Investment Analyst with Phillip Futures. In this week's edition, we feature the outlook for US stock indices, S&P 500 and Dow Jones Industrial Average. After the partial US government shutdown in October, which affected retail sales, consumer confidence and business confidence, we would think that economic data out of the US in October would be depressing. But no, US economic data for October turned out to be surprisingly optimistic. We look at ISM non-manufacturing PMI. PMI is a leading indicator of economic health. The figure of 55.4 in October beat both estimates and the previous month's figure. This reflects the expansion of the services sector in October despite the US fiscal impasse that month. US GDP for Q3 was posted at 2.8% and non-farm payrolls was pegged at 204,000, both exceeding expectations and the prior month's figures. These data added to evidence of a robust US economic recovery despite the 16-day government shutdown in October. It also reflected strength in the US economy that could justify an earlier tapering of monetary stimulus by the US Federal Reserve. After the release of labour market data in October, various Fed officials came out and gave mixed comments. There were comments by various US Fed officials that suggested possible tapering in the December FOMC meeting. Atlanta Fed President Dennis Lockhart mentioned in an interview that some discussion of tapering could well take place in December, while Dallas Fed President Richard Fisher recognized that a highly accommodative monetary policy becomes riskier by the day. However, this is not the same sentiment shared by other US Fed officials. Minneapolis Fed President commented that a taper of asset purchases would hinder the already slow rate of progress of the economy towards the goal of 6.5% unemployment. Instead, he thinks that the Fed should provide more monetary stimulus. Ahead of a confirmation hearing, Janet Yellen, nominee for Fed Chair, stated that the US Central Bank has more work to do to help an economy and a labour market that are still underperforming. This suggests that any scaling back of the Fed's stimulus program might not be around the corner. Her opinion on monetary stimulus has been consistent and all points towards the continuation of the Fed's quantitative easing. Going forward, it is highly likely that Janet Yellen will be confirmed as Fed Chair, and the confirmation would represent policy continuity for the markets and signal that the supportive Fed policy would likely to remain in place. The probability of a December tapering is modestly higher now, but we believe that the Fed is likely to maintain its highly accommodative monetary policy until March next year, considering the fiscal deadlines early next year, the Fed chairman transition, and possible shortfalls in US economic data. Despite a fragile US economic recovery, expectations of continued monetary stimulus will boost risk appetite for equities, giving a positive outlook for US stock indices. For a technical outlook on S&P 500, we see that prices have been trending upwards since its low in 2009, as shown by the blue trend channel. If we take a closer look, we can see that there exists another steeper trend channel. On closer scrutiny, we see an even steeper upward trend line. This emphasizes an acceleration of upward momentum. Zooming into a shorter time frame, the green short-term moving averages are holding their places above the red long-term moving averages. And the red MACD line is also above the zero line. These indicators support our bullish sentiment. A historical examination of previous corrections in recent upward movements indicate that the downward consolidation of upward trends tend to stop at the 61.8% Fibonacci retracement level. The chart shows 3 of such occasions. We are currently in an uptrend, therefore potential price correction is likely to test the 61.8 Fibonacci level. For a technical outlook on Dow Jones, we see that prices are also trending upwards since its low in 2009, as indicated by the blue trend channel. Zooming to a shorter time frame, the uptrend in Dow Jones is still intact as shown by the green short-term moving averages moving above the red long-term moving averages. Our bullish sentiment is also supported by the red MACD line being above the zero line. We expect further upward movement in Dow Jones as the red MACD line is above the green signal line, which suggests further upward momentum. Prices may test the support level of 15,669, which has been tested twice previously. For more information on risks and returns of investing in stock index futures, please approach any representative from Phillip Futures for further discussion. Thank you and stay tuned for more Market Watch videos.